Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Woohoo! Hope you guys have a fantastic upcoming weekend here. And it's August 10th. Again, not a whole lot today. Basically, no economic news releases. Headline news right now, the stock market's down. And that's primarily due to numbers that came out yesterday. They kind of ignored it. Now today they're kind of making it kind of creating concerns on the Wall Street with basically, China is basically showing more slow growth or slow, no growth, excuse me, more slow patterns there. So they're slowing down even further, and that's creating more concerns in the market that, as they're kind of tossing back and forth, we're not maybe as bad as we are economy wise here in the U.S., but you know, uh, but how good are we type of thing. So, and then when you look at other countries like China, which is a huge trade partner, and if they're shrinking, how are we going to be able to have any growth? So, I think we're approaching an area here where basically we're going to be an okay situation, but it's going to be excruciatingly a slow growth pattern, and I think it's going to take an adjustment for people to realize that. Uh, we're not really slowing down, but we're not really growing. So it's like a really slow pace that we might see some growth a little bit. So we may have a little bit of a dip here as the other countries, around us, especially large partners from Europe to China, uh, have some growth, have some of their financial or not financial, but some of their economic issues to sort out. And once they get kind of growth, and then I'm sure we'll be in the same pattern as well. All right, folks, so let's jump over see how the bond market's reacting today and see what interest rates are doing. Yesterday, we pulled back quite a bit, so we did have an improvement. As you can see by this long line here, we were up, and then we went down. We touched the new floor here and pulled right back up. So that was actually pretty important that we did that. If we continued this trend and had stayed down below here, there was a very good chance we could have saw more unfavorable rates coming up. So continued this trend line because we had a trend going up this way and the 3.5 coupon, and basically that would have brought us right below that trend line, and it would have broke the trend and quickly reverse and probably see worse rates. But that kind of spared us, this pullback here spared us. But today we're kind of still at that, and we'll have to see what it'll entail. Even though the stock market's down, the bond market's showing some regression here as well. So rates are I'd say rates are about the same as where we left off yesterday, or if they didn't do a price correction yesterday, it would be a little bit better. But for the most part, if you go upon where we were end of the day yesterday, that's about where we are. All right, folks. Hope you guys have a wonderful, again, a fantastic weekend coming up. Uh, and thanks for stopping by watching, and see you guys on Monday. And again, if you guys like these reports, like to see these on a daily basis, go to mikesdailymarketreport.com, subscribe, and these will be the only reports you'll be receiving from me. All right, have a wonderful day.